Our last video considered silver's coming supply side constraints. Today we explore the demand side potential for silver over coming years and consider silver's future potential price. So let's dive on in. Now, this channel provides global macro insights and preaches the virtues of sound money and sound economics. So do consider subscribing. So when it comes to the demand for silver, it largely originates from three key sources. This includes industrial demand, representing around 55% of total demand, financial demand or investment demand around 20%, and ornamental at around 25% or so. So those are our big three. So what does the future hold for these different sources of demand for silver that will, together with the supply side issues we explored in this previous video, inform the price of silver? Well, starting with industrial demand, there is enormous room for improvement in the demand and consumption of silver from manufacturing, construction and power generation. But this is only likely to really start to increase significantly once the world exits from this current economic situation. In this chart from the excellent In Gold We Trust report, the link for this report is in the description. We can see the differing sources of industrial demand. What I think is important to remember here is that a depression is a period of below trend economic growth. This is something we have endured certainly since 2008's global financial crisis. It is therefore no surprise that we have seen such little change in industrial demand as we can see here in this chart. Or to put this another way, by the end of 2019, US industrial production had grown by just 4.1% since 2007. Mark Valek and Ron Stoffel point out that Canada saw a 6.1% increase over this period, France just 1% since March 2010, while countries such as Brazil has seen industrial consumption grow by 15.8% since the end of 2011, and Russia just 1.1% growth annually. To put these figures into perspective, from 1990 to 2005, silver industrial demand grew from 218 million ounces to 521 million ounces. But 14 years later, in 2019, industrial consumption had fallen back to 520 million ounces. Such anemic demand really emphasizes why so many have felt that silver's price performance has been so lackluster. Throughout this period, supply remained fairly constant. In 2017, around 9% of silver's demand came through solar demand, but this had fallen to around 8% or so as government subsidies began to be removed. Yet we now know that the World Economic Forum's Great Reset is promising us the greenest recovery ever, where central banks are being encouraged to prioritize the purchase of bonds issued by green tech and renewable energy companies. Meanwhile, the World Economic Forum cites the good practice of the European Commission's €750 billion green recovery plan, which will provide billions of euros each year for, among other areas, photovoltaic rooftop solar panels. Around 2/3 of an ounce of silver is used in each panel here. If other countries and regions adopt such recovery plans, which seems very likely, I would suggest that this is going to be very good news for the photovoltaic demand for silver. And when we have seen previous depressions, such as between 1873 to 1896 and 1929 through to 1947, what followed was a golden age of expansion. And then there's the potential for demand for silver in electric vehicles, which we could see depicted further in this graph. Nevertheless, it will take some time for this demand to recover, but Valek and Stoffel believe that we're likely to see a peak in demand around 2026. Ultimately, it may well depend upon the level of intervention that takes place with regard to certain renewables. Of course, the secular decline of photography demand for silver is likely to continue. So it's fair to say that industrial demand for silver has seen a lost decade, and what lies ahead in the immediate term is likely to disappoint further. But in the medium to longer term, if we see an inflationary recovery, an expansive recovery, this is likely to be good news for silver. Meanwhile, jewellery demand tends to be highly income elastic. So this would mean that if incomes rise by 10%, demand for jewellery, silver jewellery, may increase by 15%. But the opposite also holds true. So if incomes fall by 10%, jewellery demand would fall by 15%. Now, the growth of real income since 2007 has been insufficient to really drive ornamental demand higher. In fact, the post-2007 growth has been just a seventh of that which it was against the post-World War II recovery. If this depression is followed by a strong recovery and real growth in disposable incomes, then a boom in ornamental silver demand could actually arise. Meanwhile, the demand for silver tableware reached a peak in 1999, and economic strife will see this level decline further. But if there is one bright shining light with regard to demand for silver, it is through investment and financial demand. While this was negative through the 1990s, the introduction of the SLV ETF in 2006, together with subprime mortgage concerns, gave rise to a sudden increase in investor demand to 49 million ounces in 2007. There followed an explosion in investment demand, averaging 162 million ounces each year from 2008 to 2012. By the end of 2019, that number stood at around 172 million ounces, around 17% of total demand. It is clear that silver's investment demand will continue to respond positively to such excessive monetary and fiscal policies that we see right now. Furthermore, our unprecedented times are likely to see expansion of Marxist monetary theory, yet some claim that this will be a modern invention. Yet the desperation of authorities to generate inflation will require out-and-out currency debasement to reduce the real size of our deficits and national debts. In addition, the proponents of financial repression will champion negative nominal interest rates. Now, financial repression and the gradual transfer of wealth from the private sector to the public sector is enormously bullish for silver's investment demand. Now, if we check the gold-silver ratio, we can see that silver remains vastly undervalued compared to gold, depending upon the premiums that you can buy at, of course. And I think that there are reasons as to why we could see this ratio go even higher. For instance, during the Great Depression, we saw this occur as a result of deflation. Yet during a period of financial repression after World War II and the subsequent need to erode national debts, we saw this ratio close. Now, under the gold standard, this isn't a perfect comparison, yet the far more inflationary period of around 1980 saw this ratio close once again. Indeed, Russell Napier believes MMT, for those not in the know, being that fair monetary wind available at the press of a button, will achieve what 10 years of extraordinary monetary policy failed to achieve: a high level of broad inflation. So inflation is coming. And so what does our analysis of silver supply and demand tell us about the potential in the coming decade for silver? And what will this mean for the gold-silver ratio? Well, Mark Valek and Ron Stoffel argue that supply is constrained while demand is bottoming out. They see silver as having the potential to outperform gold in coming years due to the constrained supply and potential for significant inflation. When it comes to price targets, well, it all depends upon the corresponding gold-silver ratio. This great table from Mark and Ron shows the gold price along this column and the silver price along the top row. Previous highs have seen the gold-silver ratio hit 30 in 2011 and 20 in 1980. Thus, our current gold price at just over $1,700 would correspond to a silver price of $56 and $85 at those different gold-silver ratios of 30 and 20. Interesting stuff. So how long will this take to occur? Well, silver's future in the medium to longer term looks very promising indeed. In a moment we'll finish with a quote from Mark and Ron, but in the meantime here's a summary of the key points we've discussed today. Do let me know what you think about silver's price potential below and what sort of target is actually attainable in coming years. Make sure you smash that like button, hit subscribe, and do check out these other videos, and I'll see you next time. Bye bye.